Good day, crypto trader. The price of Bitcoin continues to decline. To put the magnitude of the decline into perspective, key levels have been identified. The price of Bitcoin is currently experiencing resistance in the mid-$19,000 range. On October 19, during the Asian session, the bulls lost support at the psychological $19,000 level and entered the $18,900 region. The peer-to-peer digital currency made a comeback on October 20 during the New York session, but there are still obstacles to overcome. The Bitcoin price is currently auctioned at $19,276. At the 8-day exponential moving average, EMA, the bears rejected the attempt to create an uptrend. The fact that the relative strength index shows a bearish divergence between the two most recent gains only strengthens the notion that BTC will continue to decline. In the upcoming hours, the price of Bitcoin is likely to retest the $18,900 range. If support is not maintained, the price could fall to $18,700 or even $18,200. The bearish thesis is still invalidated above $20,300. An additional uptrend hike towards $23,410 could occur if the bulls breach this level. This would represent a 21% increase from the price of Bitcoin at the present time. On Wednesday, the second largest cryptocurrency's weekly performance turned negative, and Ethereum's price action only fell 2%. As the UK's economy was on the verge of collapse, turmoil in the government caused tail risks to rise quickly. Russia's massive and ongoing bombing campaign in Ukraine also did not help. The mood remains risk-averse in light of these aspects, resulting in a cash outflow from cryptocurrencies. Bulls are unsure of what to do or when to buy with the ETH price. After bulls received a firm rejection from the red descending trend line that is maintaining bearish pressure on price action, Ethereum price action experienced a week-over-week decline of more than 3%. On October 6 and September 15, when price action fell below it was doing so. If these previous events are any indication, the price action of ETH may continue to decline by another 10%, adding to the losses that have already been sustained. That could mean that $1,200 will be under pressure and could be broken to the downside in numbers. As a result, the ETH price has remained stuck in a bearish narrative and has not seen any significant shifts in sentiment. On the $1,243.89 level, which is the low on February 1, 2021, anticipate additional squeezes. $1,200 will attempt to catch the fall once that breaks, but it may fail and result in a break lower. With this change, $1,100 becomes visible. The monthly S1 support level provides additional support in addition to the psychological significance that the round number provides. If the red descending trend line were to break to the upside, traders should only be bullish. Bulls may be able to enter the break at alert levels around $1,338 because a breakout move could quickly stretch to $1,400. However, given that the monthly pivot and the 55-day simple moving average are just inches apart, any additional upside may be limited. Price action for Polkadot doesn't seem to be ready to respond to any market news or events, and neither bulls nor bears are willing to place large orders. This contrasts with other cryptocurrencies, which are extremely sensitive to current market factors such as geopolitics, central banks, and the release of economic data. However, as one side eventually gains the upper hand and dictates the course, this insensitivity may indicate a significant shift in the horizon. Is the price headed for collapse? For more than a month, Polkadot price action has been trading in a very narrow range with very little upside and downside. This is shown in the historic volatility bar below the graph, which shows that volatility has dropped to an all-time low. It almost seems as though Polkadot's price action is unaffected by any of the recent market shocks or waves. There is a possibility that buyers or sellers will soon exit their positions, resulting in an imbalance that will set off a price correction, as suggested by this. Given the current state of the global economy, if bulls decide to exit, the price of is likely to drop significantly or even collapse. That would result in a significant cash outflow and a reduction of half of price action's market capitalization. That would be represented on the charts as a sharp decline toward either $3, with the 3 monthly supportive pivots acting to halt the falling elevator, or the historical low of $1.42 as the bottom of this decline. From a bullish perspective, a break above the 55-day simple moving average near $7 is the most important indicator of whether an uptick could signal the beginning of a rally. Since August, its significance has made it the best indicator of when to enter long positions. When the rally begins, the monthly R3 resistance and the 200-day SMA will act as topside caps, limiting it to $9.50. After its meltdown on Wednesday, when it lost more than 7% intraday, Chiliz, CHZ, price action is on the road to recovery. For traders with a stake in the altcoin, the inflated tail risks that currently determine how markets move were simply too much to bear. Once this high supportive level begins to break down, expect more downside, possibly with price action halving. The market forces that were once again pushing in the overall direction they have been in for the majority of 2022 were no match for the Chiliz price action on Wednesday. As a result, the CHZ price may be eliminated. Equities fell as a result of risk-off, yields increased, and the dollar strengthened. This was the worst situation for cryptocurrencies because Chiliz price action suffered a 7% intraday drop, resulting in a significant cash loss. Fortunately, the CHZ price action found support near 17 cents at the 200-day simple moving average, SMA. CHZ even looked like it might bounce briefly, but now that the US session has taken over, it looks like it won't move at all. Tomorrow's possible breakdown of that 200-day SMA would send bulls fleeing the scene and leaving bears in their trades pushing toward 8 cents, at the low of May 12, 2022. Expect pressure to continue mounting on that 200-day SMA. However, if the 200-day holds over the weekend, anticipate a possible reversal and a challenge to the red descending trend line. A significant influx of buyers and an explosion in buy-side volume would result from a break to the upside. Although it may be overly optimistic, 22 cents could be yours if that lucrative opportunity presents itself.